Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have our weekly strategy roundtable discussion where we talk about latest news, current market conditions, macroeconomic news, and key support resistance levels, trends, and where there are opportunities in the market. Again, Tradespoon, the main difference from other services, we're concentrating on neural networks, signals in the market, and then we trade these signals in the live trading room environment. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. This is my brief bio. Disclosures are very important. I'm going to go through specific trade ideas. So trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept them in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, should not be assumed that the future trade picks will be profitable or will equal past performance. All right, let's take a look at the current market conditions. So I think main event, everybody's trying to figure out what the reason is for the current market pullback. Market is overbought, but more importantly, not only it's been overbought for quite some time, but more importantly, we have VIX expiration on Wednesday, right? So you have this sharp move in VIX because of the dealer positioning, right? So very important to not only think about your opinion in the market, but what other people are doing, right? And right now there is a let's do this again. Right now we have expiration, right? So even if you're not an option trader, you have to realize that options is a very large asset class, right? And the volume in exchanges have been exponentially growing, especially with 0 days till expiration. Options, so positioning is important. And when you have monthly expiration like we have today for equities, and then we have expiration for VIX, that a lot of positions are being closed and the new positions are being opened, right? And depending if dealers are long gamma, short gamma, they are either buying or selling the stock in large quantities. So that's probably contribute a lot to the market volatility in the past 3 days. We have, attempted assassination of Donald Trump, president. Probability of his red wave has increased. So you have movements in healthcare stocks, you have movements in energy names, right? So short term, you do see this volatility being contributed. Also, China is selling off because potential tariffs. And we had semiconductor news from Taiwan Semiconductors, ASML, and ASML wasn't that great. Forward guidance was lower, but Taiwan Semiconductor, at least from what I've listened, was fine. But the stock still sold off, right? So right now, people are repositioning for elections and for the end of Q3, which is usually volatile, right? End of Q3, the August, September are usually volatile. So after this expiration, right now we are pretty well hedged at the 545, 550 level, and that's where we're trading, right? So that's the key short-term support. Once these options expire, next Friday, we have some support at 540, right? So a little 10,000 positioning, 547, 542, not a lot of positioning. So we have to go to monthly position, August 16. And August 16, large position, you have some 542, not a lot. I would say this is a pretty small position, but much bigger position at 530 and 530. So and then let's look at the September position. So it's a pretty vulnerable setup in terms of that there is not a lot of put buying at even 540 level. So this tomorrow or today, when the options expires and people getting ready, I would watch the closing bell, right? But we are already at, I think, had almost 17 handle, and Spider is sitting at the key support 550, which is the breakout, the June high breakout. So if the 550 doesn't hold, then very quickly we can get to 540, which doesn't have a lot of positioning, right? That's the 50-day moving average, but much stronger position is 530. So we could see the market as low as 530, which I think is a healthy consolidation, but that's something we can expect. On the upside, I think 575, spiders, you have 565 positioning, and next one is 570, 575. Right, there are a lot of people are selling 600 calls into September, pretty large quantity. You usually don't see it, but somebody is aggressively selling 600 call. So that's positioning for spiders. 10-year yield after the CPI data continues to be weak. We've been spending the past couple of weeks below 200-day moving average, below 50. So still pattern of lower highs, lower lows. We're now fighting for this breakdown of 420, slightly above. We have probably the next most important news is from Powell, right? Decision on interest rates, and last Wednesday of the month. That could spark volatility in the 10-year. But 10-year trending lower, that's bullish. Dollar trending lower, that's bullish for the market. And the high yield continues to be at year-to-date high. This is bullish for the market. And small caps finally decisively broke through the 210 level, I would say, on above average volume, pretty strong volume, right? Even the last breakout that we had here, similar volume, but not as this, a little bit smaller. But I think this is decisive breakout where, I think as long as we're above 210, I would be a buyer of small caps on the buyback, and that's broadening of the rally, right? If you look at the number of stocks above 50-day moving average, we are actually getting close to we're not at the extreme levels, but very sharp reversal from the 30 level, right? And 34 level. So broadening of the market participation is a welcome news in the market. But it's not a one-way trade, and market can stay volatile, right? This choppy market, especially in summer, can continue. So what do we do? Going into the earnings season has started. We had banks. We had today energy, Schlumberger, Halliburton announced earnings, credit cards, Discover Financial, AXP. So 530 is well positioned. 530 is well positioned. 540 is not. I would assume that somewhere between 530 and 575, 20 points to the downside, 20 points to the upside is the range, is one possible outcome, right? One possible outcome, we trade between 575 and 530, which would be 4% to the upside, 4% to the downside, right? So that would be scenario number 2. We're trading in this range during the earnings season, going into end of August. Scenario number 1, earnings season is better than expected. Apple, Microsoft, Netflix, they hit a home run. Netflix did not hit a home run. It was flat last time I checked. But Microsoft, the AI theme is well established. Dollar is down, small caps are going higher, yield is down, dollar is down. Red wave, which could be good for stocks. So then we break to the upside. 1. 3, we still talk about possible soft landing versus recession. So the main narrative is soft landing, but if that narrative changes, maybe Powell end of July says, we're not going to lower interest in September. That would be like a negative surprise for the market. Market is going to probably pull back, and it's already vulnerable, right? So that would not be good. Or ASML type of earnings where Microsoft and Google comes out and say, listen, our earnings next year are going to be lower than we expected, right? Because expectations for earnings is very high. So we could have scenario where we break through the 530, this long-term, medium-term support, 530, and we trade in lower. So how many of you say 1, going into end of August, September, we're breaking out and we're making new highs, 575. Two, we're trading, still pattern of higher highs, higher lows, but more or less range bound between 530 and 575. Scenario number three, the narrative changes. Maybe some regional banks default because we do have a lot of, debt out there that's coming due, residential, corporate, real estate. Maybe Biden or actually enforces new tariffs on China, more aggressively China breaking down. So scenario number three. Martin, scenario number three, we're going below three. Done. Scenario number two. Andrei, Jeff, Peter, Srinivas, Michael, Steve, Bob, two. I'm going to go with two too, right? I think that the bullish trend is intact, right? If you look at our model for longer term, the bull trend is intact. It hasn't been broken, right? And I think as long as we're trading above 530, I think we're still in a strong long-term, medium-term bull trend. If we drop below 530, if we do drop below 530, that would indicate that the trend is reversing, medium-term and long-term trend is reversing. But as long as we're above 530, and as long as people are afraid that it will drop below 530, right? We have this large positioning. It's a relatively large size, so I think bulls will step in at 530, right? Aggressively, 540 or 530. Somewhere in this region, bulls will step in aggressively. And short term, the volatility is due to VIX expiration, right? And monthly expiration. We had similar price action, right? NVIDIA last time sold off almost at the same time, right? It was not almost, it's actually exactly at the same time. This large spike in volatility was Friday, April 19th, which happened to be third Friday and APEX expiration, right? Bulls stepped in the next week and moved the market around, bounced it back into the earnings. So it could be the same scenario that into the earnings, into the end of August, we trade between 140 and 114. But last time, what was the pullback from top to bottom? So about 20%. 20%. We are exactly 20%, right? So it's the repetition of March and April pullback, and then we rallied, starting May, So it could be the same scenario, or it could be a 2023 scenario, right? So you have to watch and be careful, because 2023 we had a similar setup, right, where we reached the high in July, and then also during APEX expiration we dropped 20%. And we just traded range bound for 20%, right? So in terms of measured moves and support, bulls will be in trouble if we cannot hold this level, right? And we already had marginal lows, but for now this breakout is intact. So as long as we're trading above 114 NVIDIA, I think it's two, right? It's two. If we drop below that and we're down more than 20% on NVIDIA, 30, 40%, well then that would violate the medium-term and long-term uptrend, right? Because the 6 months uptrend is still intact, right? The model sees that we're still heading higher. We could be at 600 by end of the year, right? If with the current intact momentum, right? If we drop below 530, we're probably not going to get to 600 by end of the year. But as long as we're above 530, 540, we could get to 600, 610 by end of the year. So that's why I think two is, at least for me, reason. Bitcoin also rebounded back, fighting for the 50-day moving average. That's bullish for the market as well. So there are signs of bullish and bearish momentum. Value stocks in general, VTV in general, are in strong uptrend, right? It pulled back, but we do have a clean breakout in the past this week above this year-to-date high, right? Which is broadening of the rally, which is also a welcome news. Peter, one. All right, any questions? All right, so in terms of services that we provide, most of the, so as I said, the difference between Tradespoon and other services is that we have models, right, based on latest advances in artificial intelligence, neural network. There's always new financial models for the stock market, that people build, and it's open source. So we use them to train our data and make inferences. And on daily basis, we have signals, right? Today, AT&T, right, basically tells you, if it reaches 1895 or 1915, this is a time to potentially buy AT&T going into the earnings. And you can see kind of double top earnings going into the earnings next week on Wednesday. If it's positive, it could break out, continue to move higher, or it will reverse down. Last earnings, it continued to rally, right? Last two earnings was a positive response. So you have to be mindful of earnings. Active trader is short-term trading. The idea, you want to probably either don't trade it or close it before Wednesday. But that would be the setup. And I'm looking for 1% gain, right? 1895 or 1915, depending on market conditions. If it's trading at 1915, then this is your entry point and this is your exit point. Looking for 1% gain, 1% stop loss. If you're more comfortable with trading options, same trade, right? Same signal based on market conditions, trade strategy A or strategy B, right? Pre-market action. You can trade options, right? You can trade Friday's in the money call, right? And same thing, you would look for, you look at the delta of the option. Usually I recommend 70 to 80 delta. And then if I'm looking for 25 cents exit, right? 1%, 20 cents. If it's delta 80, then you do, 20 cents times 80 would be, $1.60, 16 cents, right? 16 cents. So that's how, but the exit and entry is the same for stocks and options, right? Any questions on active trader, right? And you have history. I think, actually yesterday was a good signal, or day before yesterday, sorry. This is where, if you were following my trades, FedEx, ExxonMobil, JP Morgan, they all made strong rally to the upside. And these are recent. And so I take these signals and I trade them in Elite Service. So we have active trader, we have weekly trader, right? These are similar models, but analyze at different time intervals, longer time horizon, like Amazon, right, for weekly trader. And then if you go to Elite Circle, this is actually where I trade these positions, right? And there's a combination of, I got out of LA Lilly, right? LA Lilly had a precipitous drop. I did Netflix trade, Iron Condor. Netflix kind of flat, right? I wanted to be long volatility because there was a large open interest, right, in this 1 and 2 standard deviation. And we're talking about our friends at bar chart, expected move. Netflix usually during earnings moves a lot, but the expectation was, I think, 5 to 6% move. Now they reset it, so I think it was 7% move, but it was flat, right? Any questions on the Elite Circle, right? And I'm hedging, right? I bought Spider's hedge in case market continues to pull back, 550. So you have example of both options trade and stock trades, right? We did ExxonMobil this week, was a good trade. Right, opened 117, closed for almost 2% profit, 1%, 2%, and JP Morgan. These are example of stock trades this week. Right, open 214, close 216, and look for stabilization, maybe re-enter the trade again. So that would be the example of active trader, weekly trader that I try trading Elite Circle, both stock and option trades using these services. Sometimes I trade earnings, right? Like an example of Bank of America or Netflix. I did the earnings trades. Any questions on the services? We also have Robo-Investor. So if you're just looking for stock trades, we have Robo-Investor service. This is just stock trade ideas. We have a premium portfolio. This is where I trade option spreads, right? Like small cap spread was the trade idea for this week. So these are spread services, same thing with spread trader. And we do have different, we talked about Stock Forecast Toolbox, right? Stock Forecast Toolbox is one of the tools we're using, and screeners, sorry, research, screeners and research. Seasonal chart and probability calculator. So you can see similar, if you look at historical volatility, assuming VIX doesn't jump above 20, probably 540 is your support for the next 50 days, 564 is your overhead resistance, so $10 range. You know, I think 2 standard deviation would be 530 to 575, but more likely 540 to 565. So that's, and you can see the standard deviation. So that would be the range where the market is trading. Some of the tools, right? Seasonality point of view, same thing, right? One of the reasons you want to be careful is because, yes, July is usually a strong month, especially during elections, but then August, September, semiconductors, that's usually bearish for the market, right? Going into the elections, October, November. So we could have this kind of a down market, maybe either sideways or a little, momentum to the downside for the next few months, right? Because we enter in this seasonality when usually market is vulnerable for pullback. Screeners, this is just other ideas. I mean, I usually use Active Trader, Weekly Trader because it's based on the model and I vet them. This is just, the model runs and gives you different ideas, right? ROS, lows, APH, right? So those are other ideas that, if you can use to be bullish, right? APH sold off. This was one of the strongest semiconductors. If you have long-term perspective, right? These are long-term trends, right? Long-term trends. Then maybe this is the time to buy APH and pullbacks, right? I mean, but be careful because the earnings are coming on Thursday, and that obviously will influence the market. Any questions? Meanwhile, semiconductors, you can see that market internals are getting weaker. Market internals are getting weaker because any type of rally, right? In the morning we have a rally and then it fades into the close, right? So we'll see if that price, I think now it's because of the expiration. But next week, if it continues to the next week and semis are unable to hold on to the 50-day moving average, then the pullback could accelerate, right? And same thing with NVIDIA. So something to keep an eye on. Any other questions? Don, thank you for your question. Peter, Patrick, Jeff, Don, Andre. So in terms of, I mean, obviously, earnings are forefront. So far, I think still macro is driving the stock. It's not the earnings. Because Taiwan Semiconductor I think had great earnings. JP Morgan had great earnings, but JP Morgan did pull back significantly yesterday, right? Sharp reversal, retesting the lows. So obviously macro will drive earnings as well. Next week we have leading indicators, that was already, so still lower. Manufacturing is improving, right? Manufacturing data is improving. Today we have Rafael Bostic speak. That can usually cause volatility in the market, but it's probably short term. Next, GDP. I mean, PCE data, usually people react to PCE data, but we already have, June data from CPI, PPI. I don't think, usually it's not a big surprise. It's all about, that's it. Okay, we don't have, okay. So those are the macro news for the next week, PCE data for Friday. Otherwise, obviously earnings, Apple, Microsoft, Tesla, they're all gonna announce earnings in the next 2 weeks. Any questions? Meanwhile, VIX continues to grind higher. I would watch, right? VIX got pretty volatile in April, right? Going into, apex, right? It was very volatile going to the apex, and then it pulled back Monday, Tuesday, Wednesday, Thursday, and blah, 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 blah. So I would look at the VIX, right? Because now you have a lot of volatility of repositioning, but by next Friday, VIX, if it's back to 14, 13, we're trading sideways. If it jumps to 20, well then, yeah. But in April, it got above 20, right? So we had a lot more volatility in April. Again, regional banks failing, and it also depends on what are the news around the apex as well. But for now, it's at 16. June, this is not an expression. Okay, so that's VIX. I mean, high yield is stable, that's bullish, right? Value stocks outperforming. Definitely a rotation, right? Big news, everybody talks about the rotation, that the small caps are dropping below 50-day moving average, but value stocks are at all-time high, right, and breaking out. So that trade, we talked about this rotation for a very long time, and usually they have a catch-up, right? But now it could be different, right? Because also usually when market sells off, before yield was high, right? Right now yield is very low and the market is pulling back. So we're not, inflation is not the issue. Now is it soft landing or is it hard landing, right? So bears are pushing the hard landing narrative, and that's why. But they are rotating to the value stock. So as long as that rotation is on, I think that's okay. If small caps drop below 210, right, then the market will be in trouble, right? Market will be in trouble. All right, any other questions? Jeff, you can see all the trading performance here, right? So it's about over 75%. So usually I try to, 2 out of 3, 3 out of 4 trades to be successful by selling out of the money premium or doing the dollar cost average, right? So that's the idea. And then you have to keep in mind prospect theory, right? Because if you're $500 up on small caps trade or you're $500 down, we treat the wins and differently, right? We have different relationship between gains and losses, right? So this is they got Nobel Prize in economics, and this is behavioral economics theory that everybody learns in finance courses, and every trader should know about it, right? Every trader should know about prospect theory, that we have asymmetrical relationship with gains and losses, right? And it's very important to recognize it. So when you look at the percentage winning, it could be 75%, it could be 25%, but you have to be consistent when you're looking at the probability of success and return on capital, right? Because if on one trade, I'm losing more than on 3 trades that I'm winning, then that's a problem as well, right? Then I'm just spinning my wheels. So you have to structure your trade where the gains and losses, when you have $500 gain and $500 loss, you make the same decision if you do 1-to-1, right? If you do 1-to-2, you're risking $250 to make $500. Same thing. When you confront it with $250 loss or $500 gain, you make the same decisions. Jeff, let me know. Why are we not seeing all the trades from trade log in performance history? Give me an example. In theory, every trade should be in the performance page. There is some delay because we don't do it every day. There's like about a week delay, but every trade gets recorded in the trade log and gets put in performance. But there is some delay because it's not an automatic process. But there is some delay. You send me an email. Open up. So if you have a question, open up in chat. You can always email me. I mean, we could have maybe somewhere there's a bug. That's possible. But in theory, all the trades in the trader log should be in the performance page. Sometimes if it's an iron counter, it will be just 1 line item instead of 2, but every trade should be there. Any other questions? Yeah, send me the details, we'll find out. All right, if there are no other questions, then thank you very much. You guys been a great audience. I would keep an eye on macroeconomic, probably the most, right? I think as long as the yield is stable, high yield, junk bond yield is stable and dollar is lower, I think this is just a healthy pullback. Obviously, it could get bigger, right? If semis are sitting at the key level, if this is leg one, right? If we have something like this, right, then the sell-off can accelerate, right? ABC pattern. So it just depends if the 50-day moving average will hold. So I do recognize that this is possible, but we'll see. It depends on earnings, right? It depends on earnings as well. All right, that's all I have for today. Thank you very much and have a great day.